investment plan that'll get you through times of war and peace? Stick around and I'll show you how. On April 30th, 1975, the city of Saigon fell, marking the end of American involvement in Vietnam. Back in those days, the world watched as helicopters evacuated the last remaining Americans from the U.S. Embassy in Saigon, marking the end of the Vietnam War and the fall of South Vietnam's capital to communist forces. This event signaled the collapse of a two-decade-long military engagement and drew attention to the complexities of foreign intervention and nation building during the Cold War. Saigon's fall was both a sobering conclusion to the conflict and a turning point in redefining U.S. foreign policy. As chaotic scenes of evacuation unfolded, the fall of Saigon served as a cautionary tale about misjudged strategies, overextended ambitions, and the unintended consequences of protracted engagements. While devastating in scope, it also underscored humanity's capacity for resilience in the face of profound loss. Lessons that are as relevant to navigating complex geopolitical situations as they are to financial markets and creating your financial plans. Here then are 3 lessons for the modern investor from the fall of Saigon. First, avoid overextension and focus on core strengths. The U.S. involvement in Vietnam reflected significant overextension, investing resources into a conflict where the goals became increasingly obscure and unattainable. For investors, this highlights the importance of focusing on the core of a portfolio, and thus avoiding overexposure to high risk or underperforming assets. So beware of your overconfidence bias, where you believe that you can control outcomes even in highly uncertain situations, because you can't. Keeping your investments aligned with clear objectives and matching tactics can help you avoid unnecessary risk and unnecessary overextension. Next up, adaptability is critical in changing conditions. The fall of Saigon occurred despite enormous investment and effort. Right? Some large-scale shifts are inevitable, especially when conditions are changing rapidly. Similarly, investors must remain flexible in the face of changing markets, whether we're responding to economic downturns, policy shifts, or global disruptions, all of which have happened in the last month. Staying adaptable and reassessing your strategy is crucial to long-term success. This episode of the History Lessons podcast is sponsored by Victory Independent Planning. Hey, are you ready to take the stress out of your retirement? At Victory Independent Planning, we put you on the right trajectory with our exclusive VIP retirement glide path. Our smart approach prepares you for what's next by optimizing your sources of savings and income, your medical and healthcare planning, your advanced estate and giving strategies, risk management and investing, and tax planning. Let us help you glide into retirement with confidence. Text GlidePath to 239-567-5477. That's GlidePath, all one word, small letter G, to 239-567-5477 and receive a link to schedule a complimentary consultation. Do it today to start your journey on the VIP retirement glide path, because your future deserves a safe landing. And finally, resilience and recovery are key. While the fall of South Vietnam was a significant loss, the human and economic recovery in the aftermath is actually one of history's better moments. American and Vietnamese relations were normalized in 1995, and the countries have continually renewed their commitment to strengthened cooperation over the last 30 years. So for investors, this is a good reminder that market downturns or economic shocks, while painful, can offer recovery opportunities for those who remain disciplined. History teaches us that resilience, whether it's on the battlefield, at the peace table, or in the markets is an essential element of success. One final thought. The fall of Saigon marked the end of an era. For investors, these lessons emphasize the importance of managing risk, adjusting our strategies to changing conditions, and maintaining a long-term perspective, especially in uncertain times.